the idea that Musk is looking very hard at how to combine Tesla and SpaceX. He had every opportunity in his last earnings call at Tesla to say that this is a silly idea, absolutely not going to do it, no way, no how. He didn't say that. He basically was coy. He said, well, I can't talk about that this is not the right time or the place. This requires a lot more thought, blah, blah, blah. So I take seriously that he has tasked his bankers and his legal advisors with answering the question, can we do this? And if they take that seriously, which I do, then I also take seriously the obvious fact that bolting a Tesla China with all of that comes with that, the connections with the Shanghai Communist Party government, the dependence on China, the dependence on the goodwill of the Chinese government, all that stuff. And you're going to bolt that onto SpaceX, which is dependent on the federal government for $22 billion worth of contracts.
Hey, everyone. I'm Joe White with the High Speed Rodeo Substack. That is Tu Lee of Sino Auto Insights. We are here for another edition of At the Wheel, slightly late, hopefully better late than never. Yeah, we're going to talk about a couple of...
Maybe the legacy OEMs could say that as well. Better late than never, right?
Better late than never. Yeah, we're going to talk about a couple three things today that are on our collective minds. Just quickly, as you know, if you think any of this is investment advice, you're wrong. It's not. We know a thing or two, and that's about it. Two, how's it going?
We're 3 weeks away from the end of summer, so
yeah,
the schedule gets normalized after that, and I'm feeling pretty good.
Yeah, the schedule gets normalized. Well, look, so despite the fact that it's now August, things are happening. Let's talk a little bit, and I wrote about this in my latest edition of the High Speed Rodeo, and I know you've been writing about this as well. Let's talk a little bit about what's happening in the Chinese auto market, where sales overall seem to have hit a pretty significant air pocket. And from there, it's kind of a hop, skip, and a jump to talking about Tesla and what it may or may not, or what Elon Musk may or may not be doing with his very important Chinese operations. But I thought it would be smart to sort of frame any discussion of Tesla in China against, the backdrop of what is happening with the Chinese auto industry generally. And why don't you kick this off? I mean, you know more about China than I do. What's happening? Because it seems like there was all this optimism and ebullience around the motor show earlier this year, but in reality, apparently the people in China just aren't buying vehicles. At least it's not the way they used to do.
So the economy has been challenged, let's say. Real estate has been in a huge bubble. We've gotten to the point where secondary or secondhand homes now sell more than new homes. So we're getting into this maturity here, and the United States also has that right now. And this economic funk has lasted for several years just post-COVID. And the Chinese government has been incentivizing car buyers.
Yes,
and
absolutely.
The competition has also really, really put downward pressure on pricing, which made that combination created a very attractive buying opportunity for Chinese consumers. But earlier this year, they pulled away even more incentives. So right now, there's not a ton of government subsidies to purchase a vehicle. Now, depending on certain municipalities, Shanghai, Beijing, they might offer a license plate. And to remind everyone, it takes a lot of effort and luck to get a license plate in some of these major cities. And so one of the incentives early on to buy a new energy vehicle was that you'd skip the line and get a license plate.
Yeah.
Now, to your point, and you had written this very, very eloquently in your newsletter, that the market is down 14% or something like that.
That's the projection.
Some double-digit numbers.
That's the projection from the China Passenger Car Association, a 14% decline, right? And I'll just kind of say what I said about that. So 14% of a very large number, right? Over compared to last year, I think about the number I looked up was about 27 million vehicles were sold in the Chinese market. domestically. And 14% of that is somewhere between 3.5 and 4 million vehicles. I want to say 3.8 or 3.7. I may be wrong on that, but that's the gist. Not so good. If you look at a 14% downdraft, I mean, anyone would think that's significant, but you say, oh, well, it's 14%. No, but the 14% takes 3+ million vehicles out of the market. And when you do back of the envelope, math, simple math, you figure an assembly plant is 250,000 vehicles a year, and that's roughly right. I mean, some are bigger, some are smaller, but that's basically right. The way I worked it out, it was roughly 15 assembly plants worth of production is suddenly not required by the marketplace in China. And, if you overlaid those percentages on the United States market, or those assembly plant numbers on the United States market, that would be
That's a Ford Motor Company, right?
That's actually, it's more than a Ford Motor Company. It's almost double Ford's U.S. assembly plant fleet. It would be an absolute cataclysm. And I'm not saying that I'm not saying it's not a cataclysm in China. I just think I feel like, and maybe you feel free to disagree, but I feel like this is being underreported, underappreciated in the sort of Western English language, American centric media. This is a wipeout. And and we all know that China has had super overcapacity, significant overcapacity before. But now we're 9 months into this pretty big slump. Now what, right? What do these Chinese companies do? And I'm going to pitch that back to you because I know you know the answer. What are they going to do? And because I don't think the impact is not isolated in China.
We're seeing the outcomes of this through the announcements by BMW reducing headcount by 8,000 people, by Volkswagen Group reducing headcount by 100,000 people, closing factories in Germany. They've already closed some factories in China. Proposing.
Go ahead.
And so indirectly, the Western media is covering it, but not the China market to the Western audience. Okay. And one of the bright spots, silver linings for the Chinese EV makers, as well as some of the foreign automakers, is that exports are at all-time highs.
That's the magic word.
Certain factories are still running pretty high utilization rates. Not many, but some. Okay. And this is the danger and this is the risk of the Chinese government really, really not being able to contain further investment into, more capacity, more brands, more companies. And so this is not there's no short-term fix for this. And what we're going to see, because most of these companies, the pricing reduction tool has been taken off the table by the Chinese government. No involution, right? We've talked about that in the past.
Yeah.
So the other major tool, the export tool, is now with protectionism in Mexico, in Brazil, in Europe, not only on the BEV side, but now also going to be on the PHEV and EREV side. We're going to see more capacity being built outside of China by the Chinese.
There was a story today. Yeah, no, and you said some of the magic words, export, and that's going to affect Western auto companies in markets where the Chinese are able to export. I saw two items that I'll quickly hit in connection with this. Number one, just today I saw Reuters reported that BYD has shown in Brazil or debuted in Brazil a hybrid vehicle, and I think of it as like a tri-fuel vehicle. It's a hybrid electric, but it runs on petrol, but it also runs on ethanol, which of course is a major fuel in Brazil. It's a significant. I don't know what the share is, but it's a significant share of the fuel, stack, if you will, in Brazil.
Because sugarcane is plentiful in Brazil and South America.
Sure, and BYD is building this vehicle in Brazil, and their comms people told Reuters, maybe everybody else too, that 50% of the content of that vehicle is locally sourced. Haven't verified any of that, but let's just assume for the sake of argument that whoever said that is not just plain lying, that they've figured out how to get a supply chain in Brazil that will accomplish that goal.
Or it'll get there. Or it'll get there.
But by the time but point being, BYD is right out on the edge of the tsunami here, right? They're building factories in Brazil. They're lining up a supply chain in Brazil. And if you thought that the pressure in the Chinese market, the downward pressure in the Chinese market was going to wipe these companies out, no, it's actually pushing them out into markets where the Western companies, thought they had safe haven. Our listeners, probably every single one of them knows this, but let's just remind everyone, Brazil is an important market for General Motors. Brazil is an important market for Stellantis, very important market for Stellantis, significant market for Stellantis, very important. It's an important market for General Motors. It's an important market for the German companies. It's an important market for Volkswagen. So, it's just interesting to see, I think maybe this downdraft in the Chinese market will take out some of the weaker, less kind of legit players, the sort of provincial automaker from a province that even you haven't heard of, that's making somehow or another making cars because the provincial bosses want it to be so. There is that. But the real Chinese car companies, BYD, Geely, right? Xiaomi, they're going to go export. They're going to set up shop in Europe and Latin America, Southeast Asia, Canada, maybe Mexico for sure. That's what I see as kind of like the ripple effect of what's happening in the Chinese market now.
Let me double down on this Brazilian thing that you're talking about, because Brazil is a beachhead market. It's the largest passenger vehicle market in South America.
Mm-hmm.
Didn't know this until about 3 years ago. Fiat is the number one brand in Brazil. Okay, so if we talk about Stellantis, that is a huge market for them. And because Fiat is non-existent in the United States, it does okay in Europe, and there are some other emerging markets that does okay, but it's the number one brand in Brazil. On top of that, GM, Stellantis, Volkswagen, BYD, Great Wall, all have invested billions of dollars in Brazil. Okay, because it's the beachhead market for South America, and it allows them to ship locally in other countries in South America, likely also in Central America. Now, where Mexico ends up from a foreign direct investment standpoint, I'm not sure yet, but for sure BYD, and we've already seen growing pains from BYD because they had some challenges with the labor there, okay,
Yes.
and they're in courts to fight some of that or in trouble because of that. But that being said, we have to look at these emerging markets, Latin America, Africa, Southeast Asia, South Asia, as opportunities for these Chinese to really build out share, because they offer the best value to those local consumers. And we're already seeing GM consider rebadging a really, really inexpensive Wuling as a Chevy to ship to Latin America. So that they're trying to fight that a little bit. But to your point, these companies aren't passing fancies, and they want to be global as well. They understand how Toyota creates flexibility through its volume, how Volkswagen used to create flexibility through its volume, and BYD is the poster child because Wang Chuanfu has openly communicated, we're going to be the number one automaker in the world. That's our goal. Okay,
Yeah.
so there's no hiding that. There's no hiding that.
And to do that, he's going to have to build a lot of factories. Just I would wager not in China, right? He doesn't need any. I'm going to bet he doesn't need any more factories in China. Oh, the other thing I was going to say, to this, this is another kind of random thing that I stumbled across. This is actually came from Electrek. In Australia, which no longer has an incumbent automakers, right? General Motors and Ford used to have Australian operations. They're out. Toyota is obviously an important brand in Australia, but Australia is basically an open market. Apparently, all of the top 10 selling EVs in Australia are now made in China. Now, Tesla is one of them, and this will bring us to Tesla. The Tesla model, I think it's the Model Y, is one of them. It's made in Shanghai, right, and shipped to Australia from Shanghai, which makes all the sense in the world. It's it's in the same hemisphere. The rest are Chinese brands, and so there's a market that once upon a time was a Detroit brand market, and today is a Chinese / Toyota market. I just think that contraction of the Western, the European, and certainly the Detroit companies away from being truly global to basically defending the homeland, and that's about it. is something to see.
Well, and I'm going to throw a little curveball at you because I know you're paying attention to this as well. You wouldn't know it if you looked at the headlines for earnings reports from Ford, GM, and Stellantis. You would think things are great, things are perfect, because you talked about that a little bit. They're making money hand over fist, and the question becomes, and I'd love your opinion on this because you've seen this from the Japanese. Do you honestly believe, and I'll layer it with some conditions here, do you think full stop that GM Ford can disrupt themselves as they're counting their own money, building and selling big SUVs and trucks? Do you think if they want to disrupt themselves, do you think the current management are going to be able to do this? Do they have that credibility? Do they have that capability to motivate their team? Because what we've seen with legacy automakers is that, with the exception of a Toyota and a Hyundai, I can't think of any other legacy automaker that has not talked about reducing staff. Okay, and I think GM, Ford, and Stellantis will need to continue to do that as well. But I threw a lot at you, Joe, so what do you think?
All right. Well, look, so within the past week, Jim Farley, the CEO of Ford, again, Reuters reported this, had a town hall meeting. I guess it's probably one of these video conferences that everybody can dial into. Every Ford employee can dial into. And apparently what he said was, look, this is paraphrasing, I'm not quoting. He basically said, look, we have to run our business on the assumption that Chinese competitors will be in the United States within 5 to 10 years. By the way, Bill Ford, the chair of Ford Motor Company, and the guy whose name is on the building, his family controls it. He's, that guy, Bill Ford, he said pretty much the same thing in public a week or so before. So, and we know that Ford has, and Farley and Bill Ford have commissioned this kind of skunk works effort out in California to kind of replicate some kind of hybrid of Tesla plus Chinese, product development speed, product development technology. And, so I think that shows you that they recognize the threat, that they're saying to their people, we have to believe that this threat is real. We cannot believe that Washington, Donald Trump, or whoever comes after Donald Trump, and Congress are going to protect us forever. It didn't work in the 1980s with Toyota and the Japanese companies. It didn't work in the 1990s or the 2000s with Hyundai. There was, we got to do something about the Koreans. Well, guess what? They're here and they're fine. And so I think that's smart. I think
and they're building an $8 billion factory in Georgia. A multi-billion-dollar factory.
Oh, Hyundai is. Yeah, absolutely.
Yeah.
Well, and no, absolutely. And that's a whole nother thing. I mean, actually, that isn't another thing. That's very much history rhyming, because when the Japanese and then subsequently the Koreans were faced with trade pressure, tariff threats, all that kind of quotas, whatever, what did they do? They said, well, fine, we'll put billions of dollars in the ground and hire all kinds of Americans. How do you like that? And of course, everybody said, well, that's just great. Come on down. And so the market share surge by Toyota and the Japanese companies happened after they built plants in the United States with sales of the U.S. built, North American built vehicles. They didn't get to where they are today. I mean, Toyota, I think, is very close to being number one in the U.S. market, and may be number one if you just look at retail sales alone, sales to consumers alone. They didn't get that way because they shipped a whole bunch of vehicles from Japan. They got that way because they invested billions and billions in multiple factories in the United States, and Toyota is going to build yet another one down in Texas to build more Tacomas. Coming back to your original question. So I do think that at Ford, there's certainly the optics and the sonics at Ford are, look, we have to, if we don't, embrace what we're learning from the Chinese and from Tesla, at this skunk works and spread that through the whole company, we're going to be in trouble. General Motors, honestly, the optics and sonics are harder for me to figure out. There does not seem to be the same kind of willingness to smash the glass and pull the red handle. That's not Mary Barra's leadership style. It never has been. She's not someone who says, gets up and says the quiet part out loud the way Farley tends to do. And But on the other hand, I think it would be unfair to suggest that GM is ignorant of the threat. They have Chinese operations. They know perfectly well what's happening in China. They know perfectly well what's happening in the Chinese market. They have access to all the intelligence that anyone could possibly need. I think the question is, they seem to be taking a different tack on what to make of that for the purposes of defending their profitability. And I mean, they seem to be much more focused on kind of a Silicon Valley tech autonomy, brain of the car approach, and which I think you'd probably have more to say about that than me. But that seems to be what they're doing, as opposed to kind of saying, well, we have to figure out how to build cars the way the Chinese do. And then lastly, when it comes to Stellantis, again, I'm fully confident that the people, Antonio Filosa, this new CEO, and the people working for him have all the intelligence and all the knowledge that anyone could possibly want or need about what the Chinese are up to and how they do it. They can hear it from their suppliers. They can see it for themselves. They're informed people. I think their problem is that they kind of entered this period kind of, kind of rolling backwards, right? I mean, they've got a big mess to clean up within their own house. They made a bunch of missteps and sort of basic stuff, especially in the U.S. market, which they've acknowledged. They're busy fixing it. Their most recent financial results, however, from what I understand, were not what people were looking for, not what investors were looking for, not what they were looking for. And so this is, it's kind of like the Detroit Tigers. I got my Tigers hat on in honor of the end of their season, effectively. I mean, it's easier to
trading our two best pitchers. Two of our best pitchers, yes.
We're done. So. But I think, kind of like the Detroit Tigers, the Stellantis is a company that they kind of know what they want. They know what they have to do to get what they want, but the actual execution is proven tougher than you'd expect. That's a long way of saying, look, I think these companies all know what's going on. The question is whether they can see a way, whether they can figure out what is relevant and meaningful, especially from a financial investment point of view, for them to do. Because if your number one focus, which is, I think, the case for both Ford and GM, is defending truck franchises in North America that are paying the bills, all the bills and then some. If that's your number one focus, because you cannot fail to do that, is spending a couple billion or $3 billion or whatever it takes to kind of build a cheap electric car really what you should be doing? There's an assumption in a lot of the coverage of this, and me included, that, boy, if they, you see all this stuff, well, they've lost the race for electric cars. What if when you're in your soundproof room, you say, who cares? I make $10,000 or $15,000 for every F-250 or Chevy Silverado 2500 HD that this company sells. Why do I need to break my skull on figuring out how to build a $12,000 electric car with an expensive NVIDIA chip in it? Now, I'm just saying that it's like, that's kind of the investment bind they're in.
But that's the biggest question to me. What do investors want? Do they want a return, or do they want a global company that they feel proud of investing in? I don't know what the investors want.
I don't think they know what they want. And I'll frame my response to that strictly in terms of General Motors, because Ford's ownership is kind of complicated. Well, it's not complicated. It's controlled by the Ford family. Okay, so their imperatives and kind of are somewhat different. General Motors is more of a pure play, like the public owns it, right, and funds own it. They could be taken over if somebody didn't like what the management was doing. And I think at General Motors, you see the answer. What investors want is for General Motors to deliver superior cash flow, superior profitability, and return as much as they can prudently muster, return that cash to shareholders. They are buying back billions and billions of dollars in stock. That's what General Motors does. Billions. That's what General Motors does. They make profit, they pay dividends, and they buy back stock. That's the answer.
I'm going to make a mind-blowing statement, potentially mind-blowing statement to you, Joe, and I want your reaction. What if Ford is one of the catalysts for bringing the Chinese to the United States? We've already seen they've made an announcement with Geely about Europe. Mm-hmm. It wouldn't surprise me if that Valencia plant in Spain start shipping cars into the United States, affordable cars, more affordable Pumas, Fiestas, whatever, smaller cars. So when Bill Ford goes up on stage and Jim Farley goes up on stage, I feel like they know they have a punchline there that they're not telling people. And then you look at really quickly, you look at Stellantis, they have that ace in the hole too with Leap Motor. So that isolates GM a bit. And when I think of GM, and this is me being nostalgic because my dad worked there and retired there, my sister, her husband. So I do feel some loyalty to Ford as well, but not as much because my dad didn't work there. But I can't help but think GM was always kind of sort of at the forefront, and they bobbled and dropped it, or they made the wrong decision because, and we brought this up in past episodes, they bought Hughes Satellite 30 years ago. They bought Cruise. They launched OnStar, which is the modern connected was the analog connected vehicle 30 years ago. And they had the EV1. Those three things are converging today to create the environment that we're in.
Right.
And they were too early, but they were there. So when you describe them as this basically money-making machine, I that's me being nostalgic potentially, but it kind of just hurts my heart a little bit.
Well, and again, I mean, I no one from GM is here. Maybe someday someone from GM will be here. And
we would love to have you on.
Yeah. I mean, yes, I think, but I would say, and you mentioned it, GM does have some aces in the hole. They do have the Wuling brand and the Wuling kind of concept and the technology for a very inexpensive electric car that they can't, everybody believes, and I don't think they've suggested otherwise, that they could bring Wuling designs, Wuling technology to Mexico, right? I think when you're talking about Ford and Stellantis with their Chinese partnerships, Geely in the case of Ford now, and Leap Motor in the case of Stellantis, a great question. There's a bill in Congress that would ban any vehicle with Chinese connectivity technology because it would be deemed a national security threat. It's essentially protectionism. And I'm not saying, by the way, that the national security threat is completely bogus. I don't know either way. Let's just say that it is. But here's the thing. Why couldn't, especially a Chinese automaker that has a close partnership with an approved Western automaker like Ford or like Stellantis or like Volkswagen, why couldn't a Chinese automaker with those partnerships say, okay, fine, we're going to bring the physical design architecture and assembly technology, architecture to Europe. We will develop a clean for Gene, clean for the West operating system.
A local supply chain that is compliant.
Right. Compliant local supply chain. We could spend the rest of this podcast identifying the suppliers who would be more than happy, right, to help a Chinese automaker execute that project. For all I know, Rivian would help a Chinese automaker execute that project. I mean, Rivian, looking at their financial results, Rivian is a software as a service company for the brain of the car that has this money-losing EV companies, anchored to its ankles. So it's all.
When you wrote that they're going to lose $25,000 per vehicle, that is mind-blowing.
Yeah,
Joe, mind-blowing.
That's not just. And look, I mean, I'm not saying something that isn't super obvious. I mean, that's not sustainable, and they don't intend to sustain it. But that's the hole they're in. But my point is, if some Chinese company came to Rivian and said, we're going to put a piece of paper in front of you, RJ Scaringe, and you write a number on it. And that's the number that we would be willing to pay you to develop a clean for the West, clean for America, technology stack for one of our vehicles. I bet that paper would be signed because Rivian can do that. That is a big chunk of their business. So I just want to say I'm speculating to make a point. Okay. None of this is,
I'll call that, or I'll raise you. And because what if, and let's say there's a Republican president after Trump. What if a Chinese automaker goes to the governor of Mississippi and says, I'm the only game in town that's hiring people in the automotive industry, and I'm going to build a factory here and hire about 5,000 people. Not only, and And this is normally how that happens, because you had mentioned 40% BYD is 40% local content. How a new automaker entering, especially a foreign one, enters a foreign market to build, they'll recruit suppliers. They normally won't commit to building a factory unless they have been able to twist arms and coax their supply base to come along with them.
Well,
and there's normally supplier parks right next to a factory.
Absolutely. That's how Toyota did it. Here's how that, I mean, again, is why is Jim Farley saying what he's saying? They're going to be here in 5 to 10 years. We have to prepare, because he knows what you just said is true. He knows that if if BYD can build a factory in Brazil and stand up a 50% local content supply chain in the space of 3 years, whatever it was, I'm going to say 3 years, maybe it's 4, a finite number of years, not 20. Almost all, I'm just going to say all of the major technology suppliers, physical hardware suppliers in the auto industry work with Chinese companies today. They work with Tesla in China today. So it's not like Geely has to send some, hire you or some scouts to say, gosh, find us some suppliers. They already work with Aptiv.
We can help them do that, by the way.
I'm sure you can. Conflict of interest. Did we say, what do we say about that? But I mean, of course it's work, of course it's money, but it's not like they don't already know. I mean, Forvia, some months ago, I did a piece about how Forvia, which is the French company formerly known as Forcia, they had this epiphany when working with a Chinese company that looked at a prototype they had of this, all singing, all dancing, massaging seat. And the Chinese company said, yeah, we want that. And we want it in less than 18 months. Can you do that? And they did it. Okay. Big success for Forvia. But I mean, it's not like Forvia doesn't know the Chinese companies or the Chinese companies don't know them. So the idea that there's no way that the Chinese companies could not do what you said. They say, hey, pick a red state, Mr. President or Mrs. President, whoever it is, or even Donald Trump, pick a red state. Which one's your favorite today? We'll put our plant wherever you say, and we will. So anyway, I'm kind of getting off on a rant here.
Let me add some color.
I just think that they're the Detroit companies in particular, I think, are at a moment that very much resonates with the moment they were in roughly 1984, 1985, just before the I think it was the Reagan administration, or maybe it was the Bush administration right after, ended the quotas on Japanese imported cars, which had been in place as a protection, from the early 1980s when the U.S. industry was on its back. But they ended those quotas. They said, okay, it's a free market, go for it. I think they're in that kind of eye of the hurricane moment right now when it comes to the Chinese. It looks like they have protection. It looks like 100% tariffs and all this activity keeping them at bay. But to think that that's going to last forever, I think, is a bad bet. And certainly Ford is saying that. I think if you gave truth serum to the executives at GM, or maybe even you wouldn't have to, they would probably say the same thing. And so
let me add some color to your China bringing suppliers, because I speak to a fair number of them every month. They're not afraid of swapping out their current supply base, local Chinese supply base, and then substituting that with compliant components for the U.S. market. That's they're not afraid. They know their product is better. Now they're hesitant because quality might not be the same, because these are new suppliers and things like that. So there's some risk to that. But it's not because they don't want. They're not willing to make these changes. They're willing to do this because they have such confidence in their capability. Okay. The other thing too is that even if that does happen, the Chinese government wouldn't just, oh yeah, we can do that. There needs to be a negotiation. That would be one of the last things that they would try to give up. They would concede, because this is a diplomatic geopolitical discussion and negotiation.
Right. And so absolutely. And that may be the hardest part about all of this, right? The technical stuff that you were describing companies do that all the time in the auto industry. It's like, oh, we got a local content rule, fine, we'll figure it out. They do it all the time. They get squadrons of people who do that. They know how to do that. I agree with you that the geopolitical, kind of, nation to nation trade aspect of it is much more complex and probably harder to crack. Yeah, that's for
And
sure.
honestly, a lot of the concessions we might never know because they're backroom deals, these back channels that are being created. Maybe these are things that we would never ever know. But yeah, and to the shoe on the other foot, Tesla is about over 90% local content in Shanghai Giga.
Yeah.
Okay, so this is not unique to Chinese automakers.
No.
This is not unique to European automakers. Okay.
No. Well, so let's, and we're kind of rolling here, but this is the other topic I wanted to bring up just briefly. And I think not too long from when we're recording this, if I've got this right, SpaceX is going to have their results. If I don't think they're out now, I think they're coming out this afternoon.
They're coming.
SpaceX is going to have its results, and Elon Musk is going to be out talking with his other, speaking of hats, his other hat on as the CEO of SpaceX. And there's been a lot of chatter, which Elon Musk has stoked with his comments that absolutely did not rule out that he is thinking of possibly combining SpaceX and Tesla. The Wall Street Journal reported that I think advisors or bankers, I'm not quite sure who they identified, were talking about what would Tesla have to do to separate its Chinese operations from the U.S. part of Tesla, and to facilitate a merger with SpaceX, because I think rightly there's a concern that SpaceX plus Tesla China, all of a sudden there's this whole great big China component of a major military U.S. military
or U.S. component,
which is SpaceX.
Of a Chinese
Musk has said that's
operation.
That's fake news. It's baloney, whatever.
Oh,
so what do you make of this speculation? Which I think at this point we have to say is just speculation, that Tesla would have to somehow isolate its China operations in order to make a merger of Tesla and SpaceX viable.
So I'm going to point back to this 14% sales losses for the China market. So I feel like the Tesla China team sees softness in demand in the China market for its vehicles later this year, because we're rounding the corner towards the end of 2026. And we know that it's always the last 4 or 5 months of the year in the China market where you see more sales that make up for the lack of sales earlier in the year because of Chinese New Year, because of all these different things going on. Okay. And I feel like he wanted to control the narrative. I feel like he wanted to maybe see who would reach out to him and Tesla to see and kick the tires on what a transaction might look like. But, the reality, Joe, is that we know there's overcapacity in China. So who would want to take on another 1 million units? And this could be a sale. This could be a license of the Tesla brand. So, and we should open this up just so there's more players involved. Because the reality is in China, there's likely only 5 to 7 players that could even entertain something like that, adding 1 million units of capacity.
Yeah. Yeah.
You should look at non-automotive companies like a Tencent, like an Alibaba, like a DJI. Would they want to get into the automotive space? Maybe it doesn't make sense to traditional auto guys, but guess what? It makes a ton of sense because Amazon's getting into it. Alphabet got into automotive. All these companies on the Western side. So we got to open then and make that much more broad. And I've always felt, because the numbers bear this out, 50% of Tesla's global production comes from Shanghai, over 800,000 units last year. But we in the West, at least on the analyst side, financial analysts and things like that, they undervalue, and most of a good portion of their global profits come from sales of Shanghai Giga vehicles. The labor rate is lower. Right. The efficiency and the quality of those vehicles is much higher. And making almost 1 million cars a year in China. So the economies of scale they create is massive, massive, massive.
Yeah.
So
Yeah.
what does a Tesla look like without 800,000 units of production, 600,000 units of sales? And the other thing too is here's the warts that come along with maybe acquiring or licensing. The Shanghai government has these conditions that Elon had agreed to, tax abatements probably, and labor quotas and things like that. The next buyer or owner or licensor would probably need to keep those conditions in place. Okay. Number two, if I'm a Chinese owner of a Tesla brand, the Chinese consumer probably sees right through that. And the third and most important thing is what happens to FSD in China, because he's leaning into intelligent driving and robotaxis. If we're not launching robotaxis in the largest passenger vehicle market in the world, what does that do to my valuation? So all these things need to be considered. So what are your thoughts?
Well, I agree. I mean, so my thoughts are, and I think I said this when I wrote about it the other day in the newsletter. This is one of those things that may not be true, but should be. In other words, it should be true that Tesla is looking at or Musk is looking at somehow isolating Shanghai from Tesla if he wants to merge the two, and even if it isn't true, because of all the things you said and because of what I said, is that the national security component of bringing a Tesla Shanghai into SpaceX, and which is part of the U.S. military establishment, that seems like a real problem. It seems like something that wouldn't work.
You're good. You're good. What we can do, Joe, is we can go to a couple of comments that were
let's do
posted. That. Joe, I'd appreciate your assessment of GM's car buying or buying car brains comment in light of the Cruise fiasco. That's Tom H.
Yeah. Well, I mean, I think the Cruise fiasco shows you that it's easier said than done, right? I mean, you say, well, we're gonna set up a subsidiary in San Francisco, and we're going to use it to hire a whole bunch of people who understand, cutting edge tech, autonomous technology, all the hardware and software that goes into that. And they did have a lot of people doing that. And then what do you know? The operation, blew up. They had a terrible accident. They mishandled it at the top management level out at Cruise, and it's all over. Volkswagen, honestly, is another one. I mean, Volkswagen, spent years trying to hire people to create, China grade, Tesla grade brain of the car software, and they basically threw in the towel and are going to spend over $5 billion to buy that capability from Rivian. And I'm not saying that's a bad idea for Volkswagen. I'm just saying that's what happened. And so, I think it's proven really difficult. I mean, honestly, to me, surprisingly difficult for these legacy car companies to kind of get the type of people who know how to do essentially AI. I mean, right? For all intents and purposes, autonomous driving is a form of AI. To get people who can do that at a high level to come and work for them. It seems to be a problem.
Well, I want to look at it a little bit differently, Joe, because maybe they have hired the right people, but they normally don't stay more than a year. Sterling Anderson is the exception, not the rule.
I agree. I mean, I guess I could have said it that way, but I agree with you. That's the problem. It's not like they can't hire the people; they do, but then they leave within a year. Look, I mean, a top AI talent in Silicon Valley right now can probably command a pay package that's equal to, a senior vice president or executive vice president at General Motors. I mean, that's part of the problem. I mean, and maybe that's cooled down a bit, but
they would turn that down. They would probably turn that
down.
Yeah.
And if you were working at, if you had a choice between working at General Motors or Anthropic 2 years ago, and you chose Anthropic, you're going to be very happy today.
You probably created generational wealth for your family.
Yeah, you're right. So that's the problem, right? I mean, they can't, car companies can't compete with that stuff. Not even Tesla today. Tesla stock has, been a downer for a better part of the year. Anytime I say that, I feel like I need to check their share price, but it's.
I think it's at 1.2 trillion.
Yeah.
So
Yeah. Well, right. So, I mean, if you worked for General Motors or you went to work for Tesla 5 years ago or 10, 6 or 7 years ago, for sure, your family, is set probably if you went to work for Tesla and, well, they haven't done that badly at GM. They've had a pretty decent run up, but nothing like that. So, yeah.
It helps you buy a cabin up north in Michigan, but it doesn't create generational
Yeah.
wealth. That's for sure.
Yeah. So I mean, anyway, it's a long answer to a simple question, I guess. But I mean, that seems to be the problem is the legacy car companies can't offer the kind of material rewards that people know they can get if they have this kind of knowledge in their heads.
When you think about the opportunity, maybe you look at ex SpaceX employees that are in the money that really want to do it to be a force for good or create this new phase of transportation.
Yeah.
Like they buy into it because they're
Yeah.
drinking the
Well,
Kool-Aid,
I mean,
because
who was Doug Field at Ford? He was that person at a very high level. He was that person. He had been at Tesla. He'd done all these very, very impressive things with his career. He came to Ford saying exactly the kind of thing that you just said to. Just what it's meaningful. I want something really. He's gone. He left.
and Sterling, I want to say last year his compensation was almost as good or better than Mary's, I think. So
I wouldn't doubt it.
So it's not, I mean, these guys aren't getting paid insignificant, but I think you and I aren't really talking leadership. We're talking a staff level that have the expertise of the future rather than the analog past.
Yeah. I mean, and look, I think the last thing I'll say about this before my Wi-Fi cuts off again, that is not to say that the mission of like turning around, Ford Motor Company or General Motors, an iconic American company, or the mission of making transportation safer, cleaner, more accessible, that there aren't people who could make tons of money at OpenAI who aren't attracted by the more, kind of tangible, bigger society opportunity that a car company offers, right? I mean, that's for real. It's not, I want to acknowledge that there are some people who would make that choice, right? But they're probably not as easy to find as people who are like, whoa, I can set up my family for the next 4 generations. So where they will never have to worry about good education, good housing, a wonderful lifestyle. It's just a harder pitch. That's all.
And one thing that is for sure, because of the reshoring, that hard tech is seeing a renaissance. Okay, not automotive, but hard tech. Whether we're talking drones, whether we're talking boats, we're talking eVTOLs. So that's seeing a renaissance. You're seeing venture capital go into hard tech, but this is where the folks that have manufacturing experience, the folks that have engineering experience could really play a pivotal role. And that's why there's talent at GM and Ford. We're not saying there's no talent. We're saying that it is currently being used for things that might not move the needle in the future that you and I see. But
I mean, it's hard. Anyway, other comments or other questions?
So one other comment. Let me read this comment real quick. Farley also saw how China used Tesla to bootstrap a local NEV supply chain. He knows that EVs are coming, ready or not. But that was Tom H as well. Thanks, Tom, for the comments.
Thanks, Tom.
I just made my statements about Tesla China, all the things that need to be thought through, how tech companies might be a buyer, but maybe traditional automotive companies might not because the 1 million units of capacity might scare them off. But what are your thoughts on this whole Tesla China thing?
Just real quick. I take seriously the idea that Musk is looking very hard at how to combine Tesla and SpaceX. He had every opportunity in his last earnings call at Tesla to say that this is a silly idea, absolutely not going to do it, no way, no how. He didn't say that. He basically was coy. He said, well, I can't talk about that this is not the right time or the place. This requires a lot more thought, blah, blah, blah. So I take seriously that he has tasked his bankers and his legal advisors with answering the question, can we do this? And if they take that seriously, which I do, then I also take seriously the obvious fact that bolting a Tesla China with all of that comes with that, the connections with the Shanghai Communist Party government, the dependence on China, the dependence on the goodwill of the Chinese government, all that stuff. And you're going to bolt that onto SpaceX, which is dependent on the federal government for $22 billion worth of contracts. That's the number I see everywhere. I guess this must be in their
It's
S1.
over 20% of their revenues, the government contracts.
And their involvement in space at SpaceX, no doubt, in some of the most sensitive technology, most sensitive defense and national security technology that there is. Payloads, satellites that, you and I aren't even supposed to know exist. It just seems clear that if you're even thinking about combining Tesla and SpaceX, you have to be thinking about how do we isolate, separate, sequester, ring fence, whatever words you want to use, the Chinese operation from the part of the company that would be facing the United States government and the United States military, the Pentagon. That's all. And those are just obvious. I mean, I see a lot of people are now writing about this, but that seems very clear. And from what I can tell, it's going to be really hard for what you said. If you're Tesla, taking the Chinese part of Tesla and shipping it off into some ring-fenced, walled off, separately owned, separately controlled thing, what's left of Tesla? I mean, we talked about it, you talked about it, but I'm just saying, yes, that's kind of how I feel about it. If you're even toying with the idea of merging them, you have to think about that, and I'm sure they are.
I think their window of opportunity, unless they want to only be able to sell at 10 cents, 20 cents, 30 cents on the dollar, is going to close pretty quickly because, again, we know the Chinese market is contracting.
Yeah.
And that's going to affect everybody. It's not like Tesla's going to be able to.
Yeah,
to
no,
grow.
You're right. I mean, maybe that's a good way to end is, sometimes you wait too long. And if you wanted to monetize at the top of the market, the Tesla China operation, or for that matter, any operation in China in the auto sector, I think, your window is pretty well shut.
Or just not lose your shirt.
Yeah, or just not lose your shirt. But, going to potential buyers, even a tech buyer, with all the money in the world and saying, hey, sales are going to be down 14%, and that's the best case scenario, and there's 20 or 30 million units of overcapacity, would you like to buy a factory? And on that note...
And by the way, we'll keep our name attached to it, but the Chinese consumer might not be convinced that it's still an Elon company.
Yeah. No, lot of challenges. Anyway, on that happy note, thanks, everyone.
Thanks for joining us, everyone.